Hello everyone, this is Jim from Data Finance. Welcome back to our channel. We are on 25th of March, Friday, closing the week video. Alright, on this video, we will share some news first, then we will just go ahead with our charts. And we have received some more data today, and German industrial moral has sink to 14-month low level because high energy prices are just keeping industrial production away from Germany, and it's making hard to produce goods on these conditions. At the same time, there's one thing interesting I just want to share you. You remember like a supply chain problems. It happened during COVID. Right now, we will just in the coming months we will experience the similar ones because the logistics and the goods from China, it was connected by Russia to Germany and Finland, some other countries like these on railway network. And right now, DHL and some other European countries, European logistic firms are not operating in Russia, so it will make it hard when the inventories of these industrial companies they will have suffer for restocking these goods. That's important thing. That's why in the coming days we will see a lot of declines in these productions. Yesterday, NATO meeting was held in Brussels, and today President Biden is meeting with European governments and visiting Ukraine-Poland border. Visiting on that border. After that one, he made speeches regarding European Union and U.S. energy supply deal. That was important. He said we will do our best to cover the lack of Russian oil and gas. He said like this. All right, we will see how much it will happen. All right, that was the news. Let's start with our charts. As you can see here, the first chart is dollar index. I'm just on Wednesday video, I just shown that on dollar index, the playground is getting shorter and shorter. As you can see here, a flag formation is happening. On that flag formation, sharp moves are expected on upside, and also it can be downside. But right now, with more hawkish Fed officials, it may be on high side. Especially next Friday, there will be non-farm payroll data, and the recent unemployment benefit claims are really low. So we may see really low unemployment. Low unemployment means Fed will be more hawkish because they were saying that we don't want to disrupt labor market, and if the labor market is too tight, so with rate hike you won't disturb its conditions. That's why Fed will have a lot of room to raise the rates. That's the expectation. When it happens, we will see dollar index on higher level. That's also expectation of the next week. All right, let's start our second chart.
You are ready to win with us. GAN Market.
All right, gold is now on second level of the rise. Let me just show you. It was on this level and surpassed that one, just broke these resistance, and now on second step of the rise. If that can successful, if it just right now, as you can see here, is just like a trying downwards and then some declines, but this support layer level, it was a resistance. Right now it's working as a support, and it's just stopping future declines because Putin and also Belarus side is getting more aggressive on Ukraine war. So as you know, in war environment we cannot expect really low level of gold, even if We just see high interest rate of US 10-year bonds, but any positive news, I'm saying any positive news will just make the gold levels to really low levels in these raising interest rate environment, especially when US 10-year bonds are reaching 3-year highs. So please just be sure that don't get like on buy side, and in this environment anything can happen. We are testing high levels already. Downside is just free fall, so just wait for that one when we hear good news. All right, let's look at US oil. All right, US oil is kind of mixed on the last 4 hours. Reason: the first one, there is a problem on energy supply. That's why the prices are rising. Sure, that's why prices are rising. But at the same time, if US oil, WTI, solve this problem, that means there will be more demand in this WTI, so it is mixed. There is a problem and US trying to solve with its own sources. That is pushing oil prices, especially WTI prices, higher. But when there is a balance on the market, then we will see some more decline on these one. And as you know, on 23rd of March, a new contract has started. That's why we have seen some declines until that one, and we have seen. So this decline was just sell off of the lucky contract and sell. So we can just think something like this. It's actually okay, going like this, something like this. And these levels, if we just balance on these levels, it will just try to balance first, then we will just see declines. Canada also just said that Canadian Energy Ministry announced that we will just immediately raise our production 300,000 barrels in short term, and in long term, if we just make long-term contract with European partners, we will do our best to cover and offset the Russian oil, and probably with LNG some of the gas needs. If that happens, then Middle Eastern countries just can feel the pressure over them, because they are selling a lot of, for example, around 2 months ago, Poland and Saudi Arabia made a new deal for long-term oil supply. If Saudi Arabia feels that his share in the market just getting less by US and Canadian oil companies, he may do something more, and this may make the market more competitive and keep the prices, push the prices low. But it's really a little chance, because it's 5 million. Isolation of the Russian oil is not something easy. All the OPEC countries should do something first, then we can see some effect. All right, that was the news. Thank you so much for watching us. We will be together on more news on Monday. Have a nice and safe weekend. Bye.